Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the financial world, one filing at a time. This week, we're diving into Paranovus Entertainment Technology Limited's latest report, and let's just say it's packed with more updates than a season finale. Think of this report as a snapshot of where the company stands as it heads into the end of 2025. It is like checking the scoreboard in the middle of a big game to see who is winning and who needs to step up their play. So grab your popcorn because we're about to unpack what is really going on behind the scenes. And hey, if you like getting these kinds of straightforward insights into corporate filings, make sure you are subscribed. Also, we've got a fantastic community over on Discord, all about breaking down these documents, so check out the link in the description. Alright, so we're looking at a Form 6K filing, which is essentially a report foreign private issuers have to file to keep the US Securities and Exchange Commission updated on important events. This particular report is for December 2025, but a lot of the juicy details inside cover periods up to September 2025. It is not their full annual report, but it gives us a good look at their 6-month financial picture. The most important part of this filing, as with most of these reports, are the financial statements. This section is where the real story of performance unfolds, and it is what investors and analysts will be scrutinizing. We're seeing data for the 6 months ending the 30th of September 2025 compared to the same period in 2024. This comparison is key because it shows us the direction the company is heading. Are they growing, shrinking, or staying the same? Let's look at some of the numbers that jump out from the balance sheet, which shows what the company owns and owes at a specific point in time. For the period ending the 30th of September 2025, we can see figures like non-controlling interest. This represents the portion of ownership in a subsidiary that the parent company does not own. It is like having a partner in a business venture. You own most of it, but your partner has a stake and their share is reflected here. This figure stood at $500,000 for the 6 months ending the 30th of September 2025. Interestingly, this is the same amount that was reported for the same period in 2024. This lack of change here might suggest that their ownership structure in certain subsidiaries hasn't shifted significantly over the year. Now, let's talk about additional paid-in capital, or APIC. Think of this as the extra money investors paid for stock above its face value, essentially the premium. For the 30th of September 2025, this figure is quite substantial at 667,246.75. Comparing this to the 667,246.75 reported for the 30th of September 2024, we see no change. This suggests that while the company hasn't issued new stock that was purchased at a premium recently, the accumulated value from past stock issuances remains a significant part of their capital structure. Retained earnings is another critical number. This is the profit a company has kept over time, not paid out as dividends. For the 30th of September 2025, retained earnings are listed as $612,255. This is a notable increase from the $612,255 reported for the same period in 2024. An increase in retained earnings is generally a good sign, indicating the company is profitable and reinvesting its earnings back into the business. Moving on to shareholder equity, we see different classes of stock. For instance, Class A ordinary stock is a significant component. At the 30th of September 2025, the value associated with Class A ordinary stock stands at significant figures. When we look at the figures for Class A ordinary stock as of the 30th of September 2025, we see a value of 761225500, and for the 30th of September 2024, the value is 761225500. This consistency could mean there haven't been major new issuances or buybacks of Class A stock impacting its total reported value in that specific line item in the summary provided. Then there is Class B ordinary stock for the 30th of September 2025. It is listed at 121,574,250. Comparing this to the 121,574,250 for the 30th of September 2024, we see that these figures remain unchanged as well. This stability might point to a consistent capital structure concerning Class B shares over the reported periods. Total shareholders' equity for Paranovus Entertainment Technology Limited as of the 30th of September 2025 is a substantial $882,799,750. Looking at the comparable period in 2024, the total shareholders' equity was $882,799,750. The lack of change here is interesting. It often implies that while there might be internal shifts among equity components, the overall picture of what the owner's stake is in the company has remained constant in these specific reported totals on this page. Now, let's shift gears slightly. We're seeing references to aspects like average rate member and period end spot rate member for periods like the 1st of April 2025 to the 30th of September 2025. These financial metrics are often related to foreign currency exchange rates or interest rates. When a company operates internationally, as Paranovus likely does given its name, and some of the subsidiaries mentioned later, managing currency fluctuations is crucial. An average rate member might reflect the average exchange rate used for translation during a period, while a period end spot rate member would be the rate at the very end of that period. Fluctuations in these rates can significantly impact reported revenues and expenses when converting them into the company's reporting currency. If the reporting currency strengthens against foreign currencies where the company has significant operations, revenues from those foreign operations will appear smaller when translated. Conversely, a weaker reporting currency would inflate those revenues. The fact that there are specific lines for these suggests that foreign currency translation is a factor the company actively monitors and reports on. Digging deeper into the activities reported, we see mentions of acquisitions. For example, the acquisition of 2Lab3 member and acquisition of BW member are listed along with various dates. This tells us the company has been active in M&A, which is a common strategy for growth. Acquiring other companies can bring in new customers, technologies, or market share. However, these acquisitions also come with integration challenges and costs. The dates associated with these acquisitions, like March 2023 and March 2025, indicate that these deals are either recent or ongoing. The details around Class A ordinary shares, stock or equity member in conjunction with these acquisitions suggest that share-based compensation or transactions were likely part of the deal structure. We also see references to specific business segments or areas of focus such as PAV's e-commerce member. This indicates that e-commerce is a part of their business. In today's market, having a strong online presence and e-commerce capabilities is almost non-negotiable for many companies, especially in the entertainment technology space. It allows for direct customer engagement and broader market reach. The dates tied to this, like September 2023, suggest this has been a recognized area of operations for at least a couple of years. Then there is USGAP Healthcare member. This is particularly interesting. It suggests Paranovus might have operations or investments linked to the healthcare sector. This diversification could be a strategic move to tap into a different market or an outcome of a past acquisition. Understanding how these different segments perform is key to grasping the company's overall strategy. The presence of USGAP Segment Discontinued Operations member from 2022 through 2025 is a significant indicator. Discontinued operations mean that the company has either sold off or shut down a part of its business. This often happens when a segment is no longer profitable or doesn't align with the company's future strategy. While it might mean a reduction in overall size, it can also be a positive sign if these discontinued operations were a drag on profitability. The reporting of these over several years suggests a sustained effort to restructure the business. We can also see mentions of various agreements like Equity Transfer Agreement with 2Lab3 LLC member and Securities Purchase Agreement member across different years including 2021, 2022 and extending into future projections like 2025. These agreements are the building blocks of corporate finance and strategy. Equity transfer agreements are about changing ownership of a company or a part of it. Securities purchase agreements deal with buying or selling stocks or bonds. The frequency and dates of these suggest a company that has been actively engaged in strategic financial transactions, possibly related to funding, restructuring, or growth initiatives. The term consideration of shares member appears in several places. This typically refers to shares being used as payment for something like an acquisition or a service. It is a common way for companies to make deals without spending cash directly. Interestingly, there is a mention of USGAP IPA member dated October 2019. This is a very strong signal. It means the company went public or initial public offering. Around that time, this is a major milestone for any company, allowing it to raise capital from public investors and increasing its visibility. It also means they are now subject to more stringent reporting requirements, like the ones we are looking at today. Overall, the financial statements paint a picture of a company that has been actively managing its capital structure, engaging in strategic transactions like acquisitions and potentially restructuring through discontinued operations, all while navigating the complexities of being a publicly traded entity since its IPO in 2019. The stable figures in some balance sheet accounts like APIC and non-controlling interest might suggest a period of consolidation or a focus on organic growth after significant past events. However, the increase in retained earnings is a positive indicator of profitability. Alright, let's zoom out and get a broader perspective. Paranovus Entertainment Technology Limited is clearly in a phase of active development and strategic maneuvering. The mention of e-commerce and healthcare segments, alongside a history of acquisitions and discontinued operations, suggests a company that is testing different waters and optimizing its business model. The IPO in 2019 was a critical step, providing the capital and visibility needed for these kinds of strategic moves. However, there are always risks. The continuous reporting of discontinued operations, while potentially a sign of smart restructuring, also means that parts of the business haven't panned out as expected. This can sometimes indicate challenges in market execution or strategic foresight. Also, relying heavily on share-based transactions, as suggested by Consideration Off Shares member, can sometimes dilute existing shareholder value if not managed carefully, looking at the financials. The stable APIC despite ongoing operations might suggest that the primary driver of equity growth is coming from retained earnings. The increase in retained earnings is a good sign, but we'd need to see the income statement to understand the profitability driving it. The lack of significant change in some equity components, especially Class A and Class B stock, might mean the company is not heavily issuing new shares to fund operations or acquisitions at this moment, which can be interpreted in different ways, either a sign of financial discipline or a potential limitation on growth if organic progress stalls. In conclusion, Paranovus Entertainment Technology Limited appears to be a dynamic company, undergoing strategic changes and seeking growth through various means. The key for them will be to effectively integrate their acquisitions, streamline their operations, and demonstrate consistent profitability. The healthcare and e-commerce segments, if nurtured correctly, could provide new avenues for revenue and growth. However, they must closely manage the implications of discontinued operations and ensure their financial strategies are sustainable. What is your take on these numbers and what they signal for Paranovus' future? Do you think their acquisitions will pay off? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analysis. Also, don't forget to join our Discord community. The link is in the description. Thanks for tuning in, and I'll see you in the next video.